Right guys, so we are back. So in this video we are basically gonna be focusing or learning more about the physiology of price action, right? So with this example, I've picked out an excellent pair. So we're gonna look at a currency pair. We're gonna look at the pound dollar, the GDP USD. So in the GDP USD, I am on the monthly time frame, guys. I'm on the monthly time frame. So the reason why I am using a monthly time frame, guys, I don't want you when you start or start going to trade, you'll basically analyze and do everything and execute on the monthly time frame. So the monthly time frame is basically the bigger picture, right? We use the monthly time frame to basically see our high value points, right? So we use this specific time frame to pick out our high value points, which are our lows and our highs, right? So now I just want to get into the physiology of price action, right? So what do I mean when I say or mention the term physiology of price action, right? What do I mean by that term? So we're going to look at this, guys. I basically love being practical, right? So I believe being practical is the way, right? I don't want you to basically, I don't want to tell you, but I want to show you instead, right? So in anything, guys, especially when it comes to trading, don't really believe what other people are telling you, but you should actually believe in what they are showing you, right? So we're going to look at the physiology of price action. So in the previous lesson, what we talked about the strategy of the highs and the lows, right? So what the market tends to do is it follows the physiology of the market. Every time when the market gets to the highs, it reverses. Every time the market gets to the lows, it reverses, right? But you have to learn the physiology, right? The thinking patterns of these high value points, right? So you must know that at this point right here, we are not only focused on selling, right? But the first thing that we should be focused on is how the market is reaching these points, right? Because that's where the physiology gets in now, right? Because you can go to any pair or instrument and then pick out a low, pick out a high, and then you tend to see that, oh, at this high it didn't actually go to the downside. It actually went way up, and it never tended to come back and create a new low, right? So why is that? So that's when physiology comes in now. So what I'm also going to show you guys are basically the patterns, right? So I keep bringing up this word patterns so that you can be familiar with it, so that when I actually introduce it, you can grasp it much faster, right? You can grasp it much faster. So we're looking at this high and we are looking at this low. So we basically know that we are interested in selling from this particular price level all until this particular price level, right? So now the physiology is that the market must move in a certain way when it reaches these points or moves towards these points, right? I'll repeat that again. The market has to move in a certain way, right? So there is a way that it has to reach these high and low points, right? So I want you to understand that. That's the first thing that you have to understand when it comes to the physiological part of price action, right? It has to move in a certain way and print a certain pattern. So it has to print something, right? So in its printing, we may see something of this nature. So it might go up, right? Comes back down, goes back up, and then comes back down, right? Or we can have something of this. We move up, move down, and then move up again. Then we move down, right? Or we may have something of this, right? May move, break, so it has to always break, guys. It has to break and create a new high, right? Comes back and then plays maybe around and then it goes, right? So what we are focused on, guys, it's how the market is reaching these points. That's the very most important thing, right? That's the most important thing. But we know for sure that if it moves in a certain way, we definitely know that it's going to switch direction, right? But if it moves in a way of, maybe let's say it moves like this, and then it starts to do something like this, it's gonna go back up, so it's gonna keep going straight. But we know for sure that this is a high point, and now the interesting part is that as it's moving to this point, if you can clearly see, if you can compare this up really and this, right? So you can see that it moves up strong. Since it's coming to, it's approaching these levels, it's no longer having the momentum it used to have. So then again, the way it's moving, the way it's reaching our high value points, the way it's reaching our high value points, that's the most important thing. So this is what we are looking at. So I'm gonna go ahead and play that, see what happened, how it got to our level. Okay, we are close to touching it, we are close to breaking it, and then boom, we've touched it, I believe. Now we're just waiting for a break. Okay, we have a break, fantastic. Keeps continue going up. See how the markets are moving up, and then we have a sell-off, and then we aggressively start selling off. This is very powerful. So we are looking at this level. Now we actually right here. This is where we are actually going to take profit. And bear in mind, during this, you are already in deep profits, because these are the areas where you would have went or got yourself involved in these moves, right? So bear in mind, you would be in deep profit right now. I like what it's printing right now, so I'm just going to pause this for a moment and I'll go back to that example that I made earlier. So remember, guys, what I mean. I said that the market moves in an impulse, right? Moves strong down. So in this case, this is an impulse, guys. This is an impulse. That's exactly what I was talking about. And this right here is a correction, right? So correction can be something of this nature, then goes back down, right? So we can clearly see now that we are actually under a correction right here, right? Under a correction right here, and this is a correction right here. So what are we looking for again is a sharp move down. So let's just see how, let's just see if it plays according to this scenario. So this is where the market is and this is my scenario. So it's a scenario of impulse, correction, impulse to my value points or take profit areas. So go ahead and remove that. So just bear in mind, this is a correction, you guys, it's forming. So in this stages, guys, this is where we often, maybe if you see me not sending anything on the group, not sending any signals, so we are basically just waiting on these patterns to print, right? So they can take depends on how the market is moving. So normally it can take a day, it can take a day or two, sometimes it can take a week, sometimes it can take a month, but after it's done printing, we will move. That's what I can tell you. So now what we are anticipating is a move down. Since we are under a correction, now what we're looking for is basically an impulse, right? So as it's starting to move towards the direction, and once it gets to these points, this is where again we are looking at how the market is getting here, and we take it to these points, right? So now what we're gonna have again is something of this. Now this is what we're gonna be looking for as our newly high levels or take profit levels, right? So this is still going, and bear in mind guys, we had a position right here. This is where we would have entered the markets. So it went down, printed a correction, now impulse, and then correction, and then now we're anticipating another impulse. So that's the simplicity of the markets, guys. Like, I believe in simplicity. Like, simplicity is key. So when you are basically starting a new business, you will automatically want to do your research, know your market that you are based around or basing your business around. You understand what I'm saying? And you basically become equipped, with knowledge around your business. So in this case, you basically have to know your price actions, guys. Know your price actions, know your patterns, know your physiology of how the market is moving, be able to make decisive decisions. And yeah, guys, like, trading is more than just trading, guys. This is the biggest like financial markets in the whole world. So learning this is very important. It's very key. So at the moment, what I'm looking at is I'm looking for a move to come down back at these lows, and then we've reached the lows. So what did I say, guys? Sometimes what it does is it just breaks it and creates a new low. So that's exactly what it did here. So sometimes it breaks it very, very deep, and sometimes it just nearly pierces, like barely pierces, and then it switches direction. So now what we are basically looking for is a move to these points, right? These are the points that we are anticipating. So as the current market is going up, up to our levels, and it's currently here, right? So now we can clearly see the physiology of the markets, guys. So this is the physiology of the markets. So always know that on these highs, this is where the physiology comes in, because you have to know that when it comes to these points, it doesn't go keep going, but it reverses. These are our turning points area, our physiological points within the markets. So that's about it for this lesson, guys. If you still need more clarity on this, you can just let me know. Be specific on which lesson that you want clarity on. And thank you so much for taking the time to watch this video and go through it. This is knowledge that you will pat yourself in the back in the future for thanking yourself that you took the time to learn this, because this is basically a lifetime skill, guys. Right? So I won't go any further. Thank you for watching. Cheers, guys. See you on the next lesson.